Hello, guys. How we doing tonight? It's fine Monday morning. Hopefully, you guys all had a great day just as me. Feeling happy today. Thanks for asking, Justin. I'm feeling great. Had a great day, start the week nice, and of course, had some nice results as well in the trading, which of course helps. What's up, Emil? So definitely a great day today. You guys might have seen in general, we didn't have a lot of activity today, but definitely I went crazy and started giving signals in general. I don't do that often, but when I do, it goes crazy, right? A few things here first. So starting on a Monday, usually trading is a little hard, especially when you don't have a news tracker. But once we bring into account NFP, right, which brings volatility for the whole week, especially being so far away from our high impact news, we expect volatility on Monday NFP week. Sorry, I'm looking for my water bottle. Give me a second here, guys. All right. Adding and taking into account that we have SMT on the highs, I was looking for higher for lower, right? As discussed in the weekly outlook. Moreover, we had a huge opening week gap, right? I am going to plot it manually because I want us to be able to visualize this gap a little better. I like to plot these manually. I do also utilize an indicator, but I feel like it is always cleanest when plotted manually. Might consider doing an indicator for them in the future, but there's already so many of them. So we'll definitely have to see there. As you can see from the power of 3 to the right here, on ES, first of all, we had no trading below daily open, which is textbook consolidation day, right? There, you can't consolidate more than this. NASDAQ, although, was a little more bearish. Now, this is weird and slightly unexpected due to the higher time frame SMT showing NASDAQ strength relative to the S&P 500, but we still had some nice displacement lower into our new week opening gap, also a new day opening gap, but our N walk, our Friday to Sunday gap. Sorry, I'm a little bit lost tonight. I did do a very complete and complex post on Twitter, which we are going to go have a look right here. Don't worry if you just lost basically what we were looking at. We're going to go look at it right now. I do have to adjust very quickly. There we go. Just to make sure that the people on YouTube can also see. The reason why I'm not redoing all of this on the chart directly is very simple. Everything was explained here, and this will be the structure for any future posts that I do in the same direction. You might have seen in the Discord, we added the Rice Statistics thread projects, which just combines every single thread about Rice statistics, but not from an information standpoint from the app, more so as from the statistics from the app and how I personally utilize them. For example, today, my draw was the new week opening gap. Going into New York, it was the new week opening gap. If we look right here, you see the price action from the New York AM session almost completely. We had a nice swing to the upside starting at the New York kill zone, right? Which ICT says start at 7 at accumulations, short-term manipulation to bring us into our Judas swing, which took out London highs. No worries, we'll look at it back over once we're on the charts. But the important part is new week opening gap was our draw, aligned with our overnight standard deviations, as always, breaker block standard deviations. And we had just flipped midnight open at the New York Open. And so new week opening gap was our draw. Now, as I said previously, and as I engaged in, we are going to look at some more statistics. As you can see right here on this post, I looked at the statistics for large gaps. I don't like to be too precise in the filtering because I believe that leads to overfitting. But looking at the average gap size, which is of about 20-ish handles, 15 handles, I decided that times 2, so 30 handles, would be a great opportunity to filter to only look at large gaps that are over 30 handles. That is a big average move. If we look at the result more specifically here, what we'll look at is the average fill. So we understand that gaps that are very large, over 30 handles, and more specifically gap ups, get filled 87.3% on average. So this is not the amount of gaps that got filled entirely. This metric is over here. This is the average fill of every single gap. And if we look more specifically at the fill time distribution chart, we notice that 67% of the time, this happens on Monday. What I am showing you guys right now is confluence that brought this draw on liquidity, right? So how did I come to find this draw on liquidity and to trust it absolutely and to not consider any longs in that type of direction? For example, we'll look at a long opportunity as well, is due to these statistics. And also more specifically, you can also look and see that 97.35% probability that Monday returns to the new week opening gap. So combining these statistics, and sorry, I'm switching my screens a lot. As I said, it is going to take some getting used to. Might just have some pictures in TradingView for the future. But combining these statistics, along with the fact that we did not previously trade into that level, gave me all the confluence I needed to look for shorts into the new week opening gap. From this point on, you can go further. For me, that was enough. Very large gap. I understand that is a draw. Data supports my idea. I don't need more. From this point on, I'm looking at a setup reading order flow. But if you want to have a little more details into it, and we just let's bring our sessions in, you can look at the London session, right? And how London highs were rated, creating the high of day, right? On both assets, the high of day was formed from rating London session extremes. Very simple. From this point on, you could look for downwards movement. Of course, beautiful equal lows right here just after London low, but that was hit before, right? So from this point on, I'm looking for one of two things. I'm looking for a retracement into premium to go for continuation, or the other opportunity, of course, is to look for a reversal. For a reversal, I would need a lot more than this, just in general. But the truth is, this is before New York Open. No high impact news event. So when do I look for a trade? 9:30. So I'm not taking any trades before 9:30, and 9:30 showed its hand by expanding very aggressively lower. So at this point, I don't know if it's going to continue lower. I do believe, right, I have my drawn liquidity lower, but to gain more confidence, I would have to wait for New York Open. And as you can see, we clearly expanded very aggressively lower. And you can frame this as a unicorn. For me, I like my breaker to be recent. So I'm not going to be referring to this breaker all the way here to the left and utilizing that to take a trade. Oh, look at my unicorn, right? And anyways, from this point on, if you're targeting new week opening gap as your draw, you need to have, well, actually, that's pretty respectable. A 3PD array stop loss rule being right there, right? So pretty respectable trade. But as you can see from the results, definitely not the trade you would want to be in today. Sorry, as I said, a little slow today. And then what do? Well, we continue. We go down. From this point on, you might have seen in general, I shared a picture before the fact. I do like to point it out because, as I said, I'm not very active while I trade in general for most days. But in this case, I was seeing this as a manipulation, and I was actually talking with Chris, another member of the Discord, looking for double Judas. That is the word he claimed for it. Personally, I never gave it a word, but it's just when you have a fake out before doing your real Judas, and then you can continue. So just like FOMC's delivery is two-step, right? So you have your first injection of liquidity that came too quick. You still need to do your manipulation, your Judas, and your fake move. So after this first injection of volatility that led to expansion, you're going to see inducement. So right at a key level, we're going to stop, form equal lows, create inducement, right? Induce traders to go long. And then we're going to do a move in their direction. This is our Judas swing. Then we can continue. So when you have expansion at a moment like New York Open, even though we had a level previously and we had SMT at this point in time, right? Not drawing with any precision here, but you can see the difference, right? The divergence. Even though we had all our things, this is an expansion. At 9:30, I need to see manipulation. My draw was very clear today. So, since we had expansion at our key time, we now have to manipulate. This is why you see these high resistance move. Because we did not manipulate on open, so we have to engineer liquidity here before continuing lower to our drawn liquidity. And from this point, we induced this level, our drawn liquidity. This specifically is new week opening gap high. So just a little bit of sauce for you guys that are here tonight. If we look at the setup, well, what am I looking for? From this point on, I'm looking for a manipulation high. When does it come? Well, even just this move would be enough for me. But I need a sizable move that takes out liquidity, and most importantly, with SMT. Now, there was a lot of divergence here, so there definitely was SMT along the way, right? So I am going to look at it, but I'm not going to see the first SMT, because what do I also need to be looking for a trade? A breaker. So the first bearish breaker that formed after this move lower and following this move higher, right? First bearish breaker that formed is right here, right? Well, actually just above right here, which overlaps with the same PD arrays. I'm not going to go in replay mode, but forget everything that happened here. Let's make it even easier here. This doesn't exist. Oh, that didn't work out too well. Bring to front, and let's actually put it the same color. There we go. This doesn't exist. You formed a bearish breaker. Well, this is not working as intended, so let's actually remove this. I tried, guys. Bearish breaker, overlapping PD array. What am I looking for? Well, inversion fair value gap would work. We traded back into it. It is overlapping with my PD array. This is just a straight loss, right? Looking for SMT at this point in time, you have what is equal on ES, which, as I tend to say, I like to look at as equal levels on ES as it took it. So just like they were mitigated, and this was mitigated as well. So this to me is not SMT, but we still had SMT, I believe. Looking at this swing point, no, actually we did not. We did not have SMT until later down the line. So there you go. I skipped this trade because it did not look good for me, but I failed to spot that there was a lack of SMT at this point in time. So you would have completely skipped this failed setup. Why? Because there was a lack of SMT. And then that SMT came right here at 1042. Let's mark it out so I don't forget. From this point on, same thing. I'm looking for a breaker, a unicorn to enter on a trade. Also, what do we have coming up? 1050 to 1110. What do we know about 1050 to 1110? It is a macro, an hourly macro. What do we know specifically about this hourly macro, which covers London close, is that it oftentimes spool against profitable traders. What were the profitable traders previously? Now, you might say that it was lower, right? So shorts. But in this case, that wouldn't be right. I'm always referring to the most recent move. Now, of course, as always, this looks like hindsight. You guys do what you want, but study this. 1050 to 1110. This is where you'd engage looking for reversals of the previous move. And as you can see, ask and it shall be delivered. And if we look short term, you'll see some SMT formed. I'm going to put it a different color so it is a little easier to see. Right here. There we go. So from this point on, what do you see? Well, SMT was formed. What does this tell you? Well, since ES took out this swing point, right? This swing point formed at 1042, more specifically the swing high. I can treat NASDAQ just like if it did. So I can treat NASDAQ just like if this move happened like this. This is how I find hidden breakers. This, once we trade below, oh, maybe I can see something. Once we trade below the swing low, right, of the original range, is a breaker block formed through SMT. So of course, if you're only looking at NASDAQ, you don't see this. And you're waiting all the way down here and possibly going short here with a stop right here, right? It's still, there's a setup. But the real setup comes with the first breaker that formed. Now, if you traded the ES, you would have looked for, well, you actually have, is this a down close or is this a doji? Nonetheless, looking at this, and you would have your entry right here, beautiful unicorn, and just a little later than your entry on NASDAQ, actually. So you had opportunity, you had ample opportunity, just not the first, right? The first one that happened. And since I'm always trading NASDAQ, as I say, usually tends to give me better risk to reward, is this breaker block, more specifically utilizing the first overlapping PDRA. Where would your stop be? Very simple. I enter here. That's one PDRA. Net fair value gap. Order block. That's one PDRA. Where's my third? Inversion fair value gap. Actually, that is the lower entry. That is the more pessimistic entry. So let's actually be pessimistic, as I always say I am, and look for this entry. You would have waited till an inverse, and right here at 1047 would have given you your opportunity to enter in the trade with inversion fair value gap. Yet to be a fair value gap in this case, so you could not have utilized it, but you have the order block, then followed by the SMT, which I do count in my 3 PDRA stop loss rules, and then all the way to your drawn liquidity, new week opening gap, gave you a nice 3.5 hour. So very, very nice there. Let me just remove this fair value gap so we can see better. What else would you need? Well, I would use standard deviations to give me high probability of objectives to find a key point where I could look for a partial. For example, 10 a.m. open, which is a level we will oftentimes reject, aligns with relative equal lows and standard deviations. I mean, do you need more than this? No. Well, hopefully not. So I would have a very nice, very simple partial here at 2.21 R, and then hold a runner all the way down to new week opening gap and possibly hold later for fill. Personally, I held until lunch, so until here. Didn't exit perfectly at noon. I exited once we started traded back above. I trailed my stop very aggressively here and got stopped out. It might have been lower, but for the sake of pessimism, we're going to think it is right there. So just didn't want to feel like holding for a whole day with high resistance like this. And usually you'll live through, for example, at your peak, you were up whatever, and you'll live through a 60 handle retracement on a small range day like this to only catch an extra 10 handles or so. So not worth it, psychologically speaking. That is how I make these types of decisions, but definitely a very beautiful day. And at the end of the day, we managed to fill all the way up. And if you guys remember, on my post, I did discuss about 87.3. So let's actually see if 87.3 got hit. How do I do this? Fibonacci 0.8731, I believe it was. And that is on the wrong side. So let me reverse this guy. We did not reach it. Unfortunate. I would have felt nice. I would have felt real nice. But we failed to reach this. We filled this by about, I'd say, 85%. A little more data, as you guys said, as you guys requested. So I like to look at it. 80%, straight to the T. That is beautiful. Very beautiful. Not what the data said, right? 7% margin of error. I'll allow for that. Definitely a very nice day in terms of delivering to the objective. In terms of price action, very high resistance. You had two expansions, I guess, during the New York session, right on open, 1050 to 1110 macro. The rest of the day was absolute horseshit. Where you could also have justified a long, for example, is right after this inducement. So as I explained, you're looking for a double purge. How do you know that? 930 expanded instead of manipulating. So I'm going to look for some inducement. So if that inducement comes, is this the highest probability setup? Not at all, right? It is a lower probability setup, but I could still justify taking this if I have yet to take a trade in the day. This is the kind of setup I would normally be half risk if I was full risk. Now I'm already half risk. I'm not going to lower my risk even more, right? As I explained in yesterday's outlook, I'm half risk until elections are passed. So being half risk, I take this. I try and break even as soon as I can. First breaker was formed inside this range. This is a breaker range. No up close candle. in this case, right? Because if we go ahead and look on a lower time frame, for example, you'll see the breaker very easily, right? Swing low, swing high, last up close candle, but it was super quick and we did not manage to see it on a 1 minute chart. So there is a breaker range, but no breaker. In this case, you could have waited all the way to have a 1 minute breaker, but I recognize that this is swing low to swing high, sweeping the swing low, going for the high, and so I can look for a trade. More specifically, what did you also have at this point in time? SMT. So at that time, as I just stated, this was lower. And let me make sure I take the exact same candles, and this was higher. So the divergence at this point was in favor of ES being the stronger asset, but as you can see just after, we formed even more divergence to the lows. So comparing these, and then even more divergence looking at these. So definitely was a little bit of time distortion, a little bit of consolidation beforehand. Justin, we are going to get to the entry in just a second. Bullish candle. What do you mean bullish candle? Right here, I have adjust for contract changes. That shouldn't affect this at all. Maybe what contract are you on? You might be on this specific contract. I'm looking at NQ1. Let's actually, this is valuable. We are on what already? NQ. I'm always on everything else. NQZ, sorry. We are in October and 2024. Go look at the specific contract. As you can see, I still have a lot of annotations from this morning. No, still a down close candle. So I don't know where specifically you're looking at, but definitely, oh, that is not the right one. Definitely on your side. I can help you figure that out if you need some help after the PA review, just so we don't take too much time here. As stated, you can't justify a long here. Where would I look for? What would be my objective? Well, very simple. I'd look for a retracement objective. So I can refer to the full range, correct? And I'm going to go to a 5 minute chart and see that a swing point was formed right after. So I can utilize this range just as I can utilize this range. As I always say, I tend to refer to the most recent one. So using this one gives you a partial objective. Well, not a partial objective in this case. Since you are trading a retracement, my retracement objective would be my full target, right? My full objective, for the sake of repeating myself a few times. So premium and efficiency, if we look, it is the same no matter what. 5 minute chart, no matter which range you utilize, it should be the same for this one too. No, just in the premium here, it would be actually right here at the inversion fair value gap, which would have actually given you a cleaner objective to the T almost in this very specific case. But that's pick and choose. As I said, I like to refer to the most recent range. In general, I could utilize this swing point, which is clearly an impulse price swing, a very important swing point, or the most recent, whichever you wish. For the sake of the PA review, I will use the current expansion range. Going back down to 1 minute, my full drawn liquidity, my full target is here, but I have liquidity just above. I understand that this will be our target. We're going to refer to lower time frame liquidity within higher time frame inefficiencies. So in this case, you could have targeted this liquidity right here. Where is your entry? Well, first overlapping PD array. Where is it? Right here. And yes, with hindsight, we see that we invalidated this inversion fair value gap. But what can you also see? Well, I didn't know that. My entry is set here. I have mechanical rules for entry. My stop loss don't have 3 PD arrays under it. So stop loss at the low. That's why I say it was a little bit of a lower probability idea, but you would have only known after the fact. After entering here, you dug down very deep into this breaker's range, and so it was a little bit of a harder one to frame, but definitely a very beautiful objective right here, 2.7 R, and I would have looked for a partial at an important swing point. For example, this is the first level of liquidity within this move. We can look for SMT also to form at this point in time, which it did. If you see right here, ES, this swing point is just a tick under this one. So we did form SMT at this point in time. So for me, that was a very good partial to have, giving you 1.7 R at your partial. The only thing hard here would have been living through this high resistance. But as I always say, lower probability trade, I want to be break even as soon as possible. If you want a little more detail, as soon as I see us trade back, well, first, displacement away. Great sign. We form a fair value gap. This fair value gap is now my last line of defense. My stop hasn't moved yet. Because we can trade down into this fair value gap and trade into this order block without invalidating my my fair value gap, right? We can just wick all the way down and respect the fair value gap. But once we respect the fair value gap and trade back above it, my stop now moves. Where is my new stop loss? Right here, right on the line. I don't want to mess up the other trade very quickly, but right on my partial line right here. Why is it there? Very simple. Order block trading into an order block, which high probability order block. So it is this bottom line right here. I am just going to remove this for a second. Order block right here, trading into it. What is this? Propulsion block. I want to look at the mean threshold. Now, this is a little more advanced. Do I utilize this concept very often? Not at all. But it is how I read order flow. In this case, if you had your stop loss right at the low of this, that is perfect, right? You don't need more than that. But personally, I had it just actually just below this low to still allow it to wick back into it. Got lucky, managed to get a piece of that long, but the high probability trade today was definitely the short going into the new week opening gap, which was also the easier trade to spot and to trade, right? Low resistance compared to the high resistance move up that we got. This is all I saw for the day. And as you can see for the result, definitely very rough. There was a lunch rate opportunity, I believe. If I just look, noon, this is 1. So you did have a long opportunity right here, but it never gave you an entry up until this point. And at this point in time, right, utilizing just the implied, no need to even point out the implied dealing range, you're more than half the distance to your final objective. This would have been my partial if I'm looking for a trade from these lows into lunch high, right? Specifically looking at a lunch rate framework here, going into our new week opening gap. This makes sense. This looks nice, but we're already more than, well, pretty much 3/4 of the way to my final objective, already hit my partial. This to me is just too late. This specific move did not give me an entry. Later down the line, of course, as you can see from on ES, we did take out lunch highs, which gives you an objective to lunch lows as well, which on ES formed equal lows. So definitely a high probability target right here. I'm going to move it so that you guys can see SMT at this level, right? I am going to plot it on ES, just a little easier here. Definitely giving you an opportunity to short at this point in time. Wait for a breaker block. Where did the first bearish breaker block form? Well, if you're starting to look for a trade here, as soon as we take out the level with SMT, you see one breaker block that formed here that would have stopped you out. There's no way. If I'm entering here, yeah, 3 PD arrays gives me this swing high, and we just barely took it out. So if you entered on this unicorn right here, you would have had your stop at 3 PD arrays. Why specifically here? Inversion fair value gap. Actually, you had another inversion fair value gap right here. So your stop would have been even tighter and got stopped out earlier. Why? Oh, wow. That was very beautiful. Sorry, guys. Why would you have gotten stopped out? Well, very simple. You're just consolidating. And that is to be expected on a Monday like this, that more specifically had a gap this wide. What are we going to do? Consolidate and retrace and expand from and come back to new week opening gap. So stop loss there. Also another re-entry opportunity later down the line once we formed this breaker. But I'm mad at myself for even showing it to you guys because of how worthless this is, right? So inversion fair value gap, I am going to kind of frame it with precision, then allow for 3 PD arrays. So 1, 2, and then you have inversion fair value gap got invalidated. So you'd be looking at your third PD array being this inversion fair value gap. Lines up beautifully with this swing high. Does this allow enough R? Final objective, looking for 1.77, I would not have even considered trading this. The truth is, high probability opportunities were in the AM session, early in the AM session, and the highest probability opportunity today for me, specifically for the Rise model, was this beautiful short during the 1050 to 1110 macro. Any questions? I know I went a little all over the place. As I said, I'm going to get a little more used to sharing the stats with it, get a flow for it. Going to have plenty of opportunity this week. This is just the first of 4 PA reviews, so a lot to come for you guys. Hello, you're just awesome. Well, no other questions. I don't see anyone typing. Awesome. Well, I'll wish you all a great day. Good luck trading tomorrow. We'll see each other once again. As I said, very packed week, filled with high impact news event. Even though we're just before elections, just before New Year, there will be a lot of PA reviews due to the volatility we expect. You guys have a great night. Good luck trading tomorrow.